Welcome. Today, we are going to be demystifying Canadian income tax installments. If you've ever found yourself wondering if you need to pay them, how to figure out the numbers, or how to do it all without giving the government an interest-free loan all year, well, you are in exactly the right place. We're going to make this simple and, more importantly, strategic. So, our goal here is pretty straightforward, to give you a clear, step-by-step guide to the rules. We're going to cover who has to pay, how you actually calculate the amount, and, this is the big one, how to strategically pick the option that works best for your own financial situation and, improves your cash flow. We've broken this down into 5 logical parts. We'll kick things off with the one key term you absolutely have to know. Then we'll figure out if you even need to bother with installments in the first place. From there, we'll dive into the 3 different ways the CRA lets you calculate your payments, see how they work with some real numbers, and then we'll wrap it all up with a simple strategy you can use year after year. Okay, let's dive right in. Before we can figure out anything else, we have to start with the single most important concept at the heart of this whole process, and that concept is called net tax owing. Now, it's really important not to confuse this with your total tax bill for the year. Think of net tax owing as, well, it's what's left over. It's what you still have to pay after your employer has already taken taxes off your paychecks. It's that final balance you need to settle up. And trust me, understanding this simple formula is the critical first step to getting everything else right. So now that we know what net tax owing is, we can move on to the next big question. Are you actually required by the Canada Revenue Agency to even make these installment payments? This is all decided by a very specific 2-part rule. This is the question you have to answer before you start crunching any numbers. The CRA has a really clear test to figure this out, and it's not nearly as complicated as it might sound. So let's break it down. Okay, here's the absolute key. Both of these conditions have to be met. It's not an either-or deal. Your estimate for this year has to be over that $3,000 mark, and your actual net tax owing from either last year or the year before also had to be over $3,000. Both things have to be true. This chart makes it super clear. So, for instance, let's say you think your net tax owing this year is only going to be, say, $1,500. Well, right there, you can stop. It doesn't matter what happened in the past, even if you owed 10 grand last year. Because you don't meet that first condition, you're not required to pay installments this year. Simple as that. You have to pass both parts of the test. Okay, so let's say you've passed that 2-part test and you are required to pay. The next logical step is figuring out, well, how much do you need to pay? And the good news is the CRA doesn't just give you one way to do this. You actually get 3 different options. And this is where the strategy really kicks in. You have a choice, and picking the right alternative can make a huge difference to your cash flow during the year. The goal is always to pay the lowest amount you're legally required to, and that keeps more of your money working for you. So, here they are, your 3 options. Alternative 1, the current year method, is based on your best guess of what you'll owe this year. Alternative 2, the prior year method. This one's often the easiest. It's just based on what you actually owed on last year's tax return. And then there's Alternative 3, which a lot of people call the CRA method, mostly because it's what they use on their installment reminders. It's kind of a hybrid, using numbers from the 2 previous years. All right, theory is one thing, but let's see how this actually works with some real numbers. I find that applying these rules to a couple of case studies is hands down the best way to really get a feel for the financial impact of your choice. So first up, let's meet Jesse. Now, Jesse's income and tax situation have been a bit up and down over the last 3 years, which actually makes him a perfect example for seeing how these different calculation methods play out. So first, let's just look at Jesse's numbers. We've calculated his net tax owing right here. For this year, 2019, his estimate is $4,000. Last year, 2018, it was $7,000. So, since his current year is over the threshold and one of the past 2 years is also over, Jesse definitely has to pay installments. The real question is, how much? Okay, now this is where it gets really powerful. Look at how dramatically different these outcomes are. Using Alternative 1, based on his current year, Jesse pays a total of $4 grand. That's 4 easy payments of $1,000 each. But if he just blindly followed the prior year method, or the CRA's reminder, he'd be on the hook for $7,000. And just look at that crazy CRA method. 2 tiny payments followed by 2 massive ones. That would be an absolute nightmare for budgeting. For Jesse, the choice is crystal clear. By just taking a few minutes to calculate all three options, he can see that alternative 1, the current year method, gives him the lowest total payment of $4,000. This is a huge win for his cash flow. It lets him keep an extra $3,000 in his own pocket during the year, instead of sending it off to the government early. Okay, now let's look at a second case to really hammer this home. This shows how a totally different financial pattern can lead to a completely different strategic choice. This is Miss Knight, and we'll look at her first scenario from our source material. This is just a perfect example of why you have to check all three options every time. In Miss Knight's situation, her income actually went down quite a bit, so using the current year method would mean she has to pay over $3,000. But because her net tax owing last year was only $600, choosing alternative 2 makes an unbelievable difference. So the bottom line is this: by following the rules and doing the math for all three methods, Ms. Knight can legally choose the option that has her paying only $600 for the entire year. That's just $150 each quarter. I mean, that is a massive, massive improvement for her cash flow compared to the other options. All right, we've gone through the core concept, the threshold rule, and the three calculation methods with some real-world examples. So let's pull all this together into a clear, simple strategy you can actually use. Here it is, the whole process in 5 easy steps. First, figure out your net tax owing. Second, use that 2-part test to see if you even have to pay. Third, if you do the math for all three methods, current year, prior year, and the CRA method. Fourth, you just pick the one that gives you the lowest number. And fifth, you get to enjoy better cash flow. That's really all there is to it. This is the key to smart tax planning. This quote from our source material really just nails it. You know, taxation isn't about guesswork or what feels right. It's a system that's based on very specific rules. And by understanding and just methodically following those rules one by one, you can navigate the system correctly and, as we've just seen, to your own best advantage. And so, we'll leave you with this final question to think about for yourself. Now that you know the rules and the strategies, which method is going to be the one that optimizes your cash flow this year? The power to make that smart choice is in your hands.